So how treasury stock is recorded? So recorded at cost, not at par. Classified as a contra account for the equity. It means increase in treasury stock means debit, but it is the opposite account for equity. When normal account of equity increase, it's credit. When treasury stock increase, it's debit. The illustration is that following entry records of repurchase of 74 million shares for $4 billion. Right? When you pay back when you repurchase your shares, you pay the money and purchase the shares. The entry would be treasury stock to cash. Cash decrease credit, treasury stock increase, which is debit. And how it is recorded into the balance sheet. So you see, it is a contra account, so that it is written in minus form, right here. So retirement of treasury stock. So it cancels the stock certificates when you repurchase your stocks. So you cancel those stocks, and stocks cannot be reissued. Once shares are repurchased, neither total assets nor total liabilities are affected. Why? Because already on the asset side, cash decrease. On the liability and ownership side, ownership of equity or owner's equity also decrease, right? So these accounting is equal to assets liability plus owner equity. That equation remains balanced. And then memorandum entry made decrease number of shares issued in stockholder equity. So there's going to be like a entry in the memorandum of or charter of the company that we are retiring these issues. So once we are retiring, there is a difference between repurchase and retirement. It means you are cancelling the issued stock. Once you cancel, you cannot reissue those stock. Permanently eliminated. Okay, resale of treasury stock. When you resale that, entry would be increase in cash and increase in shares as well. So no gain or loss on transaction involving treasury stocks, because no new shares are issued, old shares are floated into the market. So the amount received on resale in excess will be added to paid in capital from treasury stocks. If less than received, then it is debited to paid in capital stock. Simple. If you receive more amount, that becomes your reserve. If you receive less amount, that becomes your expense as well. Okay, let's talk about. We have an illustration here. Pause the video and read the illustration here, and then we solve it together. Here we go. On July 22, 2014, Depot resold 1 million shares of treasury stock for 55 per share. Assuming that the average cost of treasury stock was 54.05, the entry would be, so the cost was 54.05, but they sell at 55. It means 0.95 they receive more, right? So cash would be they receive 1 million multiplied by 55, so they receive cash 55 million, and the original price of the stock was this one, and in excess of the treasury, it is treated as a reserve. It is treated as paid in capital from excess of transaction, increase in credit, right? I have pasted an illustration here. I just want you to pause the video and try to solve this example by yourself, and this is very easy example. Okay, I hope you find it easy. Let's do it together. So we have Harnett Corporation reported the stockholder equity as follows. They have common stock worth of 3,600 million. paid in excess of value of common stock. The premium on common stock for this one, retained earning this one, treasury stock 85 million, and total equity 12,205 million. So number one transaction is that they issue more, which is 16 million. They issued stock at 10 per share, plus they purchase a 6 million share of treasury stock, $100 million. So they purchase treasury stock as well for $100 million. Okay, and then number three is that they sold 3 million of treasury stock, purchased in part B above for $70 million. Right, half of the shares they sold for $70 million. Let's generalize these entries. Number one, what is the transaction when they issue 16 million shares? When they issue 16 million shares, we know that the par value is 1.5 and the excess is, which is 8.5 multiplied by 16 million, answer is 136 million. So that is in excess of par. And now generalize the transaction of purchasing 6 million shares of treasury stocks for 100 million and the sale of 3 million treasury stock for 70 million. So what is the entry? You see how much cost per treasury stock? You purchased 6 million share for $100 million. It means on average the share price is 16.67, right? So the entry would be that you purchase, it means you have to pay, cash decrease 100 million, treasury stock increase 100 million, treasury stock to cash. The next one is you sell 3 million treasury shares for 70 million. It means you receive cash for 70 million, right? And you decrease 3 million treasury stocks, and in above it is the excess, in excess for like you can just say that the 3 million cost you 16.67. 3 million into 16.67. Answer would be here. So the value of those three stocks was 50 million and paid in excess of treasury stock, that is your premium, which is 20 million. This is how you record for the journal entry. We have successfully completed the treatment of long-term liability plus the treatment of owner's equity, right? So we have already completed our whole accounting syllabus. I would be uploading assignment 8 on our WeChat group and our Blackboard discussion forum as well. Please respect the due dates and remember our final is on 16th of July. Okay, this is the end of the lecture. See you next time. Take care, stay safe, have fun. Bye bye.